losing options trader. So what does the data tell us? Whether you lost a fortune, a small fortune, if you are trying to trade options, there's a pretty good chance you're gonna lose. 30 to 35%. Guarantee you anything, but from an odds perspective, this certainly puts us in a much better bucket, right? You don't need to hide. I know you click on this video for one reason and one reason only. You are a losing options trader. Now don't worry, you got plenty of company, because when you get into options, most people lose, myself included, for many, many years, and it was not fun. But whether you lost a fortune, a small fortune, or maybe just your last paycheck, this video is going to provide you a different approach to trading options that, statistically speaking, is going to give you a much better chance to actually make money. And that's just straight up the facts. But what you do with this information, that is ultimately up to you. So what does the data tell us about options trading? 90.8% of options traders are men. The average annual salary is around $110,000, just north of that number. Only 10% of options traders actually make money. 55 to 60% of option contracts are actually closed prior to the expiration date. 30 to 35% of option contracts expire worthless, and about 10% of option contracts are actually exercised. If you don't know what that means, not a huge deal, but you probably shouldn't have been trading options in the first place. Now, with those stats, I want to point your attention to two of those specifically. The first is that 10% actually make money when trading options. I think it's safe to say the odds are stacked against us, right? If you are trying to trade options, there's a pretty good chance you're going to lose. Most people lose, and it's not even just 6 out of 10. No. 9 out of 10 lose. But I want to take it a step further. One trade, 1 week, 1 month, even 1 year, as many potentially witnessed just a few years back, of profitability does not mean shit. It really doesn't mean shit. And I'm sure a lot of us can relate to that. How many of us potentially made a lot of money during a period in the market a few years ago in the early 2020s and proceeded to then lose it all, lose most of it, or actually lose more than what we originally made on the run up? Probably a lot of us raising our hands, right? Now bring your attention to the second number of interest, and that is, and 30 to 35% of contracts actually expire worthless. Now this is interesting because it tells me there's actually a decent amount of people who will hold contracts to zero. We just don't want to be the ones who buy a contract at $2 and hold it to zero, because then we lost it all. Now, side note, that actually could work, and you could have a trading strategy where you do that, because if you got enough winners to make up for it that do 2, 3, 4, 500%, I mean, you could do that. That could work for you. For most people, probably not. So what if you could jump ship? What if you can jump ship from trading options the usual way, where you buy a call, buy a put, and sell options so that when you sell it and it goes to zero, you actually make money, versus buying an option and going to zero and you lose money. Now, it does not guarantee you anything. This is not going to guarantee you anything, but from an odds perspective, this certainly puts us in a much better bucket, right? Would you rather be in a 10% bucket, or would you rather be in a 30 to 35% bucket? Those odds sound better to me, and then it comes down to figuring out how I could get myself in that bucket and then make it work and make more money and scale up over time. That we'll get to in a second. So how do we jump ship into this bucket? We need to learn to sell options. Now, there's a few ways to go about doing so. You can sell covered calls, you could sell cash secured puts, or there's more advanced option strategies. There's spreads, there's more that you can do. There's actually a lot of different ways that you could still trade options and sell options, and not necessarily trade them as, I think we're gonna go up or down, I'm gonna buy a call or buy a put. I'll have more on that in a minute. So take a look at this chart here on Investopedia. This is using the delta. So if you understand the option Greeks, which we actually have videos on from a while back, you can look them up on the channel if you're confused, or look them up to understand them if you don't. When you use the delta, which is given on the option table, if you're using a platform, you should be able to see the delta that's provided to you. You can use that to essentially guesstimate, and it's a pretty close estimation of the percent probabilities that that option is going to expire in the money or out of the money, and out of the money meaning worthless. So the higher the delta, the higher the percent chance the contract expires with value, the lower the delta, the lower the chance it expires with value. So you could use that to your advantage of going, okay, well, I want to look for deltas under 0.5, meaning I roughly have better than a 50-50 shot at this expiring worthless if I'm trying to sell it and I anticipate this to go to zero for me to make money. Let's take it a step further. I know what you're thinking. You're probably like, well, how can I sell options and get those big juicy gains everyone's flaunting on social media, making videos, making posts, and telling you why they should follow you? Well, I hate to break it to you, but I'm going to be honest. That's just not going to happen when you're selling options. You are not going to achieve big, fat, flashy, juicy, massive gains. As they say, you got to risk it for the biscuit, right? So people who are showing you the 10,000% returns and the crazy percent returns, they're risking money to make that. And there's a pretty low chance that that's happening, because to do that, they are likely playing options with very low deltas, okay? Like we just talked about before with the whole delta chart. If you're selling options with low deltas, there's a higher probability that more than half of those are going to expire worthless. But if you're buying them, unless you have an amazing strategy that no one has ever come up with and it's all kept to yourself, there's a good chance that a lot of your trades are worthless on the buy side, where you buy a low delta option. A lot of those expire worthless. But the few and far between that go off are the ones that could get the flashy gains and can get the attention and all that great stuff. Or maybe it's not so great in the grand scheme for education purposes on social media. But here's how I view it. If someone told me I could make $10 a day and slowly scale that up over time, and next year I can make 15, and the year after that I can make 20, the year after that I can make 30, etc., right? But I can do that every single day. And that's sustainable. You're not going to win every single day, but that's kind of, to hammer this example home. Or my other option was I could make $200 twice a month, right? Two big winners twice a month, but I have a very high chance that I lose $500 or I lose 5 trades at $100 a pop in order to achieve those 2 winners. Now, I can manage it. I can start to figure out how I can risk properly and I can dial in the risk reward. But the odds to me are a lot more in my favor if I was to take the $10 a day, sell options, make a little bit of money, but do it consistently, and that can compound and add up over time. And I'd rather be the person that's profitable, but not making a ton of money, but actually making money, than the person that isn't profitable or is profitable this week, maybe this month, maybe even this year, but then gives it all back the next year and then mentally has to deal with the repercussions of that and probably blow up and do other things and have it affect other aspects of my life that selling options would not. Now, selling options doesn't just end there with selling calls and selling cash secured puts, essentially allowing me to buy 100 shares of a given stock or ETF and then sell calls to somebody who is speculating. And if those calls never expire in the money, I keep all of what I sold that call for. It expires worthless, and that's it. I kept the money. Selling puts is kind of the opposite, where I could essentially say, hey, if a stock gets to this price, I'm happy to buy multiples of 100 shares depending on how many contracts I sell. Let's say, for example, Apple is trading at 195 and I sell a put at 180 for 2 weeks out and Apple never gets to 180. Well, I will keep the entire premium of that put. Maybe it was $100, maybe it was $50, maybe it was $10. I would keep that entire thing and then I can go do it again. I just have to have the capital in my account in order to cover if Apple was to go under 180 and it were to expire in the money, I'd have to buy 100 shares at that strike price. Now, if you want to learn more about spreads and other option strategies, we actually have an entire options playlist for you here on the channel. Highly would recommend checking that out to learn more. We also have more details and other specific videos covering covered calls and cash secured puts if you want to take it a step further. But think about it that way. Hopefully that was helpful. I'll leave any other links and resources down below this video in the description box. Thanks so much for watching, and I'll see you guys in the next one. Peace.